Now, the biggest contributor to the negative growth was the mining sector. Let's discuss this now with Kevin Lings. He is an economist from Stanlib, and he joins us from Johannesburg. Kevin, good morning to you. So a third successive drop in GDP growth. That's even before the COVID-19 difficulties. My question to you, how deeper and long-lasting will this recession be?
Morning, exactly. I think it's going to get a lot worse when we see, obviously, the second quarter data. As you said, the first quarter numbers, that decline was before the COVID-19 lockdown. So next quarter, we're expecting decline where you can get a fall of anything like 30 to 40%. And remember, we've just only had 2%. So I think that's really where the weakness is going to show up. And we expect that every single sector in the economy will be negative in the second quarter. And then hopefully as we've gone into more sort of a reduced lockdown, businesses are opening up. Hopefully the third quarter we start to see the recovery coming through then and then continue on into the fourth quarter. But even if you get that recovery in the third and fourth quarter, you're still going to have a very negative number for the year as a whole. So we're working on around about minus 8.5% for the year. The IMF has a decline for South Africa of minus 8. National Treasury, I think, minus 7.2. So whichever way you look at it, this is going to be South Africa's worst recession. And obviously the data is going to get worse before it gets better.
Yeah, I suppose it rings true now what people are saying, that we actually are going to go into a depression as opposed to a recession. Kevin, talk to me about the critical implementation of reforms that were promised. How important is that right now? You're talking about sectors that are going to be on the negative when we look at the data for the next quarter.
They're absolutely critical. That's where the focus has to be in terms of the economic outlook. I thought the Minister of Finance did a good job in describing what the challenge is ahead. He was clearly saying that if we continue business as usual, in other words, we continue to grow this economy over the medium term at 1 to 2%. We're not going to create jobs. Government debt's going to get worse. The situation will continue to deteriorate. So the focus is, how do we start to put this economy in better shape? And what the minister was saying is that we need economic reform. Now, obviously, the government has to decide which economic reforms. We're a little bit unclear about where the focus needs to be. But from a Minister of Finance perspective, things like infrastructure development, the ease of doing business, private-public partnerships, all of those are critical. And so what you want to see as soon as possible is the implementation of those reforms. What's been lacking in the past is that we've discussed policy and we've got policy initiatives, but we've always stumbled when it comes to implementing these reforms and making them real. In the meantime, businesses losing confidence, unemployment rising. So what's critical now is that we start to implement these reforms. It doesn't mean you've got to implement all of them at once, but you've got to make a start and you've got to show that you want to put the economy on a better path. And for me, the priority needs to be things like private-public partnerships, some infrastructure development in things like water, sanitation. All of those would help communities, but also get the economy going.
The unemployment rate currently stands at 30.1%. How terrible is this picture likely to get?
Well, we're saying that over a period of a year, from the second quarter of this year to the second quarter of next year, we expect to lose about 1.8 million jobs. Obviously, as the economy starts to recover, some of those jobs should start to come back. But it's very clear that there's going to be a spike in the unemployment rate. As you say, it's already 30%. For youth unemployment, the number's 59%. And that's where the vulnerable areas are in terms of people leaving schools and universities, not being able to gain employment. So I think the unemployment rate is going to move considerably higher than where it is now. And that's going to add to the challenge, right? So it's going to add to the social dynamic and the social unrest, and it's going to put an increasing strain on government finances. Very expensive to fund unemployment because there are a whole lot of social payments. So again, that adds to the urgency to start to implement reforms and try and get employment going. So South Africa's under enormous pressure now at every level, whether you talk about unemployment growth, government finances, confidence levels, business consumer confidence. So I think that urgency is recognized by the government, certainly by National Treasury and the Minister of Finance. So I'm encouraged by that. The question is, how quickly can we start to make a difference in implementing policy?
Kevin, briefly for me, you talk about the social unrest element. How palpable is it?
It's very clear that it's there, right? So certainly before the lockdown, there was an increasing number of social protests going on. We tend to call them service delivery protests, but in reality, it's frustration. It's a whole lot of people throughout the country feeling that they're not participating in this economy. And my sense is that underlying tension remains there. We saw it with the delivery of food parcels as it spilled over. We see it with xenophobic violence. It's clearly there. And if you can't obviously create jobs, then naturally that frustration is going to increase. And when you've got youth unemployment of 59%, that's where the real risk lies. So I don't think we've got time on our sides, and it's entirely feasible that at some point that protest becomes much more substantial and can get out of hand. So there's big risks around that.
Kevin Lings, thank you very much for your time.